What's going on, boss crypto traders? Next up, we're going to be talking about Fibonacci retracements. And if you guys have not heard of these before, Fibonacci retracements are designed to forecast the scope of corrections when trends are prevalent. Okay? And the most common retracement levels you're going to see are the 61.8% level, the 50% level, and the 38.2% level. Now, don't worry if you can't remember those because they're going to be on the charts in just 1 second, all right? So you're going to want to go ahead and pull up TradingView, or I'm using coinsignals.trade, or you can use whatever charting platform you most like, Coinigy, whatever. All right, and then I'm on Bitcoin here, Bitcoin USD, the weekly chart. If you go look at the top left corner of your trading platform, and again, not all platforms look just like this, but most of them have this toolbar on the side. And if you click the third little tool here, it'll be the pitchfork, okay? And that's not the tool we want. So we're going to click the little drop down arrow next to it and go down to fib retracements. Okay. So whenever you guys want to use a fib retracement, I'll go ahead and throw one up here so you can see what they look like. I'll take off the extensions for now. Is there a way to easily do this? Yeah. Maybe we can't take them off now. That's okay. We'll leave the extension fibs on there, but let me put this in an area where it's going to be useful too. So let's look at the current price action, right? So like I said, when you pick the Fibonacci retracement tool, you're going to have to pick 2 anchor points. Now, we use Fibonacci's to get an idea of where certain resistance levels will be in a downtrend and where certain support levels will be in an uptrend. So this is a downtrend, intermediate term. So the first anchor point would be at the top of the move, and the second would be at the bottom of the move, which is right here at the bottom of this wick. Okay. So how is this information useful, right? Let's look at right-hand trading. If we were just putting this up there as it formed, right? We have the top of a move here and the bottom of a move here. What is useful about this? What does this mean? Okay. So if we look at the 0.5 fib retracement level, what that means, and it's at $13,000, is that level is exactly 50% up from this leg down, right? Meaning if we go to the top of this move and drag a price range all the way down to the bottom, we can see price dropped 70%. Okay. So half of 70 would be 35%. And where does that lie? Boom, right at the 0.5 fib level, because it's exactly 50% of the way between these 2 anchor points. All right, does that make sense? Likewise, the 61.8% fib level, that is 62% up from the bottom. This is 78.6% up from the bottom. This is 38.2% up from the bottom, right? You guys, not making sense here? So let's look at the levels now. The most common levels used, like I said, are the 61.8, the 0.5, and the 382 level. All right, so a strong trend may only retrace to the 38.2% level, as we're going to see up here in a second, whereas a weaker trend might retrace as far as the 61.8% fib and even occasionally going all the way to the 76.8% fib, right? This is quite common in the crypto markets, as often you'll get big moves up that retrace 80% of the way back. But the 50% retracement level is the one that is most commonly used, and it's going to be the key area to watch for long setups and uptrends, or sell setups and downtrends, okay? So at the moment, this was still an uptrend. So to be calculating this, I would actually be using the bottom of the recent leg up, and then here, I'll show you what I'm talking about, okay? Let me just, instead of using this current price action, I'm going to go back to 2015, where we charted in the support resistance video, okay? And we'll just go all the way through the bull so you can see what I'm talking about on how these fibs are useful, right? You guys want to see this in action. You want to see how you're going to use this when trading, right? So we're in this bear market here, right? We're in a downtrend. We are carefully watching for a potential reversal, right? So whenever we get a reversal, what do we want to see in a reversal, right? We want to see a trend, since we're in a bear market, we want to see a trend stop making lower lows. Let me move, that was an accident. We want to see a trend stop making lower lows. We want to see higher highs, and we want to see higher lows, okay? So at this point, once price hit this level on big volume, if this was going to be the bottom, we were going to see at some point after, this was not going to make another lower low. It was going to make a higher low, and it was going to make a higher high than this bounce point, right? Does that make sense? Price bottomed here, launched all the way up to here on the move before consolidating right here for several weeks, right? You guys see that? Bottom here, top was here, and then it consolidated for a bit. And if we look at this top from the bottom, right, the bounce from the bottom up to here was still meaningful over here and over here as it flipped from resistance to support. We talked about this in the SR video, right? So this move off this potential bottom is pivotal now. So at this point, you might be saying, if you were waiting during this trend and you're saying, all right, at this point, we're making lower lows here. I'm not interested in longs until we can get a good bounce. So maybe at this point, you see a nice bounce here. You try on long into support, you get stopped out, or you get stopped out here. And then at this point, you see a nice bounce, right? Price makes a huge move after already coming down 76% from its high. It got dumped another 36% in a week, okay? So guys, when you get a big candle like this at the start of a move, right, the start of a down move, that's usually a sign of strength. Just like you get a big candle like this at the start of the move, that's a sign of strength. But when you get a big candle at the end of a move, later in the move, that can often be a sign of exhaustion because you've come up so far, and then after all that, it goes even further. It just usually breaks down, okay? If that makes sense. And then in the reverse side, price goes down 76%, and at the end, it goes down another 40%. That's usually exhaustion from the sellers, right? And the buyers bought it up by this big wick, right? So at this point, if you're a buyer and you're looking to be long, you're getting quite interested, right? So at this point, you might be deciding, I want to enter a trade now, okay? So the Boss Crypto method will show us some candle setups in which we can do this combined with our Fibonacci retracements. Let me actually hop into a daily here. It'll be a little easier to see what I'm talking about on the daily. Okay, same area here. This was that bottom we're talking about on the weekly. So what we do, if we think that this is going to be the bottom, you know, if we're going to be buying long, it's only because we think price is going to go up. So if that happens, price will make a higher low somewhere in front of this level, right? So we're going to start our Fibonacci at this level. So we'll put the first anchor point at the very bottom here. And then the move after this potential bottom went all the way up to the top of this wick. So that is where we will put our second fib, okay? Now, if we were looking for resistance levels, right? Like if price, like right here, price just made a lower low. So any longs at this point, you're looking to sell the rally, right? You're not looking to hold for new highs. You're looking to get out on a bounce. In that situation, you would use a Fibonacci from the top of the move to the bottom of the push down, right? And this was a strong downtrend, so we see it got rejected right at the 38.2% fib level, right? If this was a very weak downtrend, then potentially it could have gone as high as the 0.5 level and the 618 level, right? But it was a really strong downtrend, so there were a lot of sellers as resistance at that 38.2% fib level. All right, does that make sense? So now going back to down here, that was looking for resistance to sell into, And maybe you would do that the same way down here, right? We don't know that this is a bottom like we do now because of future, the future chart patterns and all that shit. But we don't know at this point that this was a bottom, right? So I'm looking for longs here, maybe because I think this might be the bottom, but I'm also looking to sell anything I've bought, if you did buy down there, into resistance, right? Top of the move here, drag all the way down to the bottom of the move. And look at that. Once again, price gets rejected right at the 38.2% fib retracement level and then dumps. So how I might play this, if I was able to catch a setup anywhere down here, I would look to be booking some profits into this 38.2% fib level. And then if it goes that far into the 0.5 fib level, and this actually reached pretty much the 0.5 fib level. Now, something you'll notice is price won't always reach exactly to the fib level. And that's why we don't want to think of these as exact lines. Just like we were talking about in the support resistance video, we want to think of these as areas. And that's why my partner and I will often use rectangles around a zone, because often that is what happens is price will come into it, and smart sellers who see that there will be a lot of sellers at that level will sell early and put their sells in front of it, right? And then if liquidity or if the buyers are not strong enough to push through them, they won't reach to those people selling at the 0.5, and those sellers will have to chase as it dumps, and that usually causes even a stronger dump. Is that making sense, guys? So it's always smart if you're in this trade down here to put some sells maybe here, right, in front of the 382 and in front of the 0.5, in front of the 618. Likewise, when we flip this, right, for the person looking for longs after this, right, in a downtrend, the anchor point goes top to bottom. When we're looking for sells, when we're looking for longs, the anchor point goes bottom to top, right, bottom of the dump to the top of the pump. Now, if I'm looking for longs, maybe I would, the same way I put some sells into the 382, maybe I put some bids into the 382. All right, so at this point, I'm saying, all right, prices come all the way up to $310. I'm happy buying a little bit back at 256. I'm happy starting my position there because price has already moved to 310. Compared to 310, that's a nice little bargain. Now, we don't know how far price will dump, so the way I play it is I usually put very small buys on the chart and wait for price to prove itself. So maybe I want to put $1,000 here in Bitcoin at this point. So I'm watching for these 3 fib levels. I'm watching for price to come down and react to one of them. Okay? Once it does, then I can put on my main size. But beforehand, right, who knows how far price could come down? This is a bear market. This could go all the way down and break this low at some point. So I don't want to be buying, $300 here,